or how price is going to move. That's it. It's just an idea. If you look at the chart and you're like, my bias is bullish, that's your idea, that you think that price is going to go bullish, so you're going to wait for price to create some sort of support so you can take a buy. If your bias is sells, then you're looking for price to create a resistance, because if price can create a resistance, or candles can create resistance on a 30-minute or 1-hour time frame, then you know that, okay, I can probably take a sell and I can stick to my bias. Bias is the direction where you think price will continue. We already talked about this. If you think price will continue bullish, you need to look for supports to be formed. That's your bias. Now a lot of people, they go down the rabbit hole saying, oh, you know what if the daily is like this, and the 4 hours like this, and the 1 hour is like this, and the 30 minutes like this? Man, think about it. There are infinite amount of scenarios that can play out. Infinite amount of scenarios. Man, I can spend the whole day talking about different scenarios, but we only talk about the most generic scenarios, and then we go off from that, because most of your learning, it comes from the chart. The reason why we tell people to post charts, the reason why when you join my groups, Market Fluidity, when you join the groups, I tell everyone to post charts, post analysis, post before and after, because when you can post before and after, that's your learning process. You're learning that way. So choosing a bias is when you're looking at the charts, or you're looking to see if price is making highs or if price is making a low. If price is making a high on the 1 hour or the 4 hour, then there's a higher chance that the bias is bullish. I mean, that's just simple. If price is making a low on the 4 hour or the 1 hour time frame, then that means price is in a bearish bias. All right. How to enter when price is moving quick? So there are only two pairs that move really quick: gold and GJ. Gold and GJ are the only two pairs that move really, really fast. And it just takes a lot of experience in watching it happen a lot of times to see that, okay, whether we can enter this or not. So high volume pairs like gold and GJ, they have a lot of volatility too. But one thing to really understand is that when price is, now let's say we have a resistance up over here, we have support down over here, and candles are making, like they're making higher highs and higher lows like this, and they're moving like considerably fast, and you have a target up over here at resistance, right? So you turn around and say, okay, you know what? If price is making higher highs and higher lows, there's a higher chance price is going to come up to this resistance. So you're going to say, okay, you know what? I'm going to wait for price to create some sort of a support, and then I'm going to take a buy, right? But then what happens is that the candles print like this, and the next candle, it prints like this, goes right up. And you're like, oh man, I was waiting for it to create support so I can take a buy, and I couldn't take a buy, because that support did not form. So what do you do in this case? When this happens, you miss the trade, you look at it, you're like, okay, fuck man, I missed this trade. How could I have taken this trade? What was there in the market that I saw I could have executed on? Or maybe what was there in the market that I saw that I can use this information, take it to the next day, and then try to take the same trade? So when you have candles making higher highs and higher lows, now sometimes, you see me take trades on live streams. I'm just going to say, okay, you know what? This candle is making a high. I'm going to take a trade here and anticipate the next candle to go up. And the next candle goes up. And someone turns around and says, but why didn't you wait for a retest? Because I've seen this happen a lot of times. When price is making higher highs and higher lows, you just gotta execute. That execution comes from watching it happen over and over again. It comes from having experience. Whenever I'm seeing higher highs and higher lows being made and there's a target not too far away, I'm going to be executing on the probability, right? This is very important. You're executing on the probability that the next candle should continue moving up. That's what you're executing on, the probability. In the same way, when price is moving bearish, let's say you have a, let's draw this over here. You have something like this, and you have price. Let's get these blood candles here, these blood candles of death, because sometimes when people are looking at bearish candles, they're taking buys, so these are blood candles. Price moving like this, and someone's going to say, okay, you know what, man, I'm going to look for a pullback, because a pullback is going to happen. It's going to create a resistance because Raja said so. I learned that in the refresher webinar, and then I'm going to take sells on the next candle that closes bearish, and then price is going to come down and we're going to hit take profit. But what happens is that someone somewhere, they take a sell and the next candle just goes down like this. And where was the stop loss? The stop was above the previous candle right over here. That was the stop loss. So if you had a buy, you just got fucked. So the whole beauty, okay, now here's the beauty. Here's the beauty of having the stop right here. So now, if you make a note of what I'm about to say next, this will help you. This will help you a lot. If you make notes of what I'm about to say right now, this just came to me, and I'm just going to all right. So what if you take a sell and your stop is above, that candle? And what happens that the next candle goes up and takes you out. Now, two things have happened. Next candle takes you out. It took you out because maybe now it's going to make a resistance or a retest for a price to continue moving down. So it stopped you out. So now your trade bias, your bias was sells, right? Your bias was sells, and that selling bias got taken out by the candle that went bullish and stopped you out. Now that was the first chance you gave to yourselves. So now what's going to happen is most probably, price will go up, do this, and then you're going to be greeted by another bearish candle that might look something like this, right? Bearish candle looking like this. So now price had made a low. It's in a downtrend coming from resistance, and candle has closed bearish. So now you can give your trade a second chance. How about that? How about that for information? Now you can give your trade a second chance, because if this is a 30-minute time frame, or if this is a 1-hour time frame, and you got stopped out in your first chance, and now you waited for the candle to go bullish, you waited for the next candle to go bullish right over here, and then you waited for the next candle to actually flip and close in your direction, now you can give your trade a second chance. Now you can say, okay, perfect. You know what? Now I'm going to give it a second chance. I'm going to put a stop above this candle, and then I'm going to wait for the next candle, or anticipate the next candle to go bearish like this. It's going to break that motherfucking low, and the next candle can continue moving down to promised land. That's going to be a second chance you're giving your trade. This goes the same for buys. Right? So you're going to have to do some cognitive thinking and really trying to explain how it works the same for buys. But I'm pretty sure it should be pretty simple, right? But let's say that the next candle does not go bearish, and the next candle goes bullish, and it stops you out again. If it stops you out again, then you're done for the day, right? Then you're done for the day. Then that's it. Then there's something going on in the market that's just stupid, so that's it. At that time, I just say, okay, you know what? I'm going to stay out for the day, because 1 or 2 trades keeps the stress away. What about have a wider stop loss? Brime, Philic, I think that doesn't make any sense. Have a wider, these things of like having a wide stop and a mental stop, they just don't make any sense. Let's have a wide stop loss. Let's have a mental stop loss. What I'm talking about here is the way how I trade. Simple. There are people who don't like it. They can leave. People who like it, they can stay. But at the end of the day, everyone's going to stay. Usually candles will create higher highs and higher lows, or lower lows and lower highs. Trusting that concept will allow you to take trades. Right? You need to trust this concept. The trust in that concept is the most important thing. When price is moving bullish, it's going to make higher highs and higher lows. If you have missed the buys, I'm going to talk about this all the time. If you have missed the buys, wait for price to create a low, and then take a buy, because there's a very high chance it will retest the high it just created. This is very important. You need to trust this concept of higher highs and higher lows, because, man, I see a lot of people taking trades just because they want to take a trade. There's no rhyme and rhythm to that trade. You just strictly have to wait. Okay, let's go to the next one. Oh, okay. What's this? Perfect. So this is the 1484. The high was here. What's this? The high was 1484.15. Low was 1482.88. This is a $2 move. A little higher than $2 move. I think this is the 15-minute time frame. I think Roger did the 15-minute time frame here. Okay, perfect. So let's say we have a break up over here, right? We have a break up over here. Candle breaks out. This candle goes bullish. Candle close with no wick. Candle close with no wick. This means there's no range for the next candle to go up. So, someone says, okay, now I'm gonna wait for a retest. I'm gonna wait for a retest, and then I'm gonna take a buy, and then price is gonna continue to go up. But what happens is that there is no retest, because it's someone is saying, I asked about IC markets. Well, if no one answered your question, that means your question was irrelevant. So, so then sometimes there is no retest, because you have to understand gold and GJ are very high volatile pairs. They will not do retest sometimes. Sometimes you just have to accept the fact that, okay, you know what, I'm just going to have to let it go. So there's no retest, price goes up, you're just sad over there thinking, oh man, all my friends caught this buy and I'm just sitting here with no trade. So you have to relax. You have to. So this is a lot of momentum too. This is a lot of momentum and there's no retest. But when price is moving up, what is it going to do when price moves up? Price is going to make a high. And then you got to wait for support to be formed, right? And then a support is formed, right over here. You have a support formed. You have candle that closed bearish. You have a candle that closed bullish. Someone can turn around and say, okay, we're going to take a buy, right? So when you take a buy after this bullish candle in the anticipation of what we have learned so far, right? Yes, this is recorded. Fuck, man. This is recorded till the 30th December. After 30th December, this is not going to be on YouTube. Okay, right? So you have candle closing bullish. Now you can anticipate the next candle to go bullish, right? But the next candle closes bearish. Now what do you do? What do you do when the next candle closes bearish? What I'm going to do is I'm going to take off half of the position, because now I don't know whether the next candle is going to go bullish or not, because this one closed bearish. I just don't know. I just don't know what's going to happen. So I'm going to exit the trade. Most probably I'm going to exit the trade and I'm going to wait for the next candle. Right? So now what happens? You have the next candle that closes bullish. You're like, okay, perfect. This is support. Support has been formed. Support has been identified. We have this area to fill. There's a very, very strong momentum. So there's a high chance that price will continue up and break this high, and we're going to continue on to our merry way. But in reality, what happens? You have this bearish candle that stops you out, right? Once this candle stops you out, oh, hi, Sinan. All right, so we're going to take a little 2-minute break. Actually, a 1-minute break. I'll be right back. All right, we're back. Perfect. So then you have this bearish candle that stops you out. So now you're like, okay, so now I'm just going to probably wait. Now I'm going to wait to see what's going on. So you're waiting this bearish candle. You have a bullish candle. It's still below this area. And then you have this bullish candle right over here. Now essentially this bullish candle now, it matches up with the resistance here to the left, but now you're going off of the probability. You're going off the probability that, okay, what's the chances or what's the probability that the next candle is going to go up? Because we have such a heavy uptrend. So now you're going off the fact that, okay, since we're making higher highs and higher lows, price needs to respect this low and continue moving bullish. And then, essentially price starts to move bullish after this. So at the end of the day, you're placing your trust in the fact that if price is bullish, candles have to make higher highs and higher lows. That's very, very important. It was right over here. See? And now when we look at price, let's say somewhere over here, let's take a look at this example right over here. So price made a high. Price made a high. You're like, okay, perfect. If price has made a high, there's a very high chance that high is going to get retested again, right? So you're like, okay, perfect. So you move down, price makes a support, candle closes bullish, you take a buy, this candle closes bearish. Now you're like, okay, I might want to exit, might want to close half of the position. You close half of the position, and then what happens is the next candle goes up. You're like, oh man, I should have just left it all open. You're like, okay, yeah, no big deal. Price made another high, and then you had the bearish candle, and then you had the bullish candle right over here. You had another bullish candle right over here, which closed higher than the previous one. So now you can say, okay, since now the candles are making higher highs and higher lows, what's the chance for the next candle to continue moving up to fill this wick or to fill this range? There's a very high chance. So next candle continues, goes up, and it fills that range. Oh yeah, Merry Christmas, everybody. Merry Christmas. Christmas Day, yay. Let's go to the next slide, sir. Let's see what we got here. Ooh, what about break, retest, fake outs, and patterns? Well, if you've been looking at this webinar for a long time, you will now understand that break and retest, fake outs, they're all the way the market moves. The market moves, it's just the way the market structure moves, right? So if you have an uptrend, price is going to make a high, it's going to make a support, it's going to come up. So this will obviously be resistance. It will break this resistance, it will come down, and it will retest, and it will continue up again, right? So these things that you're looking at right over here, this is where you're looking at candles closing bullish. This is where you're looking at candles closing bullish, because if you have candles closing bullish, then there's a higher chance for the next candle to continue moving bullish, right? We'll see if we'll have some time for simulations. We'll see. Trading based on candlesticks is the complete understanding on how they move. At the end of the day, you have to really understand how candles move, how they behave, when or where they make higher highs and higher lows. That's all done on practice. I mean, you can ask all questions you want. You can ask, oh, what if this, what if that, what if here and there. There are infinite amount of possibilities, and the best learning is done when you look at the charts, you review charts, you look at the candles, how they're moving, and you really start to see that how could you have taken a winning move. Whenever price makes a high or a low, there's a 70 to 80% chance it will be retested. And this is the way how I have made consistent profits in the last, year and a half. This is it. This is the way I made consistent profits. Whenever price makes a high or a low, there's a 70 to 80% chance it will be retested. Over and over and over again. This is all what I've done. So you have to really understand how the candles are really functioning and moving. So now let's go to the next section here. Let's see what we got. Where is it? Oh, so yeah, so that's your edge in the market, right? Your edge in the market is to identify a move that's going to happen 70 to 80% of the time. And for me, that's in trending markets. In ranging markets, don't trade in ranging markets. That's bad. In trending markets, you have to trade in trending markets. When price is moving up, that means it's creating a high. When price creates a high, it will create a support and it will have a higher chance of retesting that high. Same goes for when price is making a low. When price makes a low, that means it's in a bearish momentum. And when price makes a low, it will pull back. It will create a mini resistance. And then there's a 70 to 80% chance it will retest that low. Right? It will retest that low. I know I'm moving fast because I have a time constraint here. So, you can always rewatch this back. You can rewatch it 4 or 5 times. So you're going to get some more understanding of this too. Now, what about emotions?